Good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Wednesday, August 18th, 2021. This is actually a major update, so I hope that you will listen to the end of this update, the video. The market basically has given me confirmation that the highs are in, and I've labeled it as such. So we have the 5 of minute 5, the minor 5, the intermediate 5, the primary 5, and the cycle 5. And I can go one above and put the SuperCycle wave 3 completion point right there. Now, what did produce this? The market again came down and broke below 44.11.75. And when it did, it slid. So what that produces is a case where this was taken out. So this could not in any way, shape, or form be a fourth wave. It could have been here if the market would have continued and just continued higher. But it did not. It turned and it sank and it went quick. And that just turns everything negative. And whether or not the market does put in a small rally tomorrow, it still appears that the highs are in. The SuperCycle wave 4 correction has now begun. And so what I can count so far is 1, 2, and this is the beginning of, or a lot of the third wave in progress. As I can see, when I compared this particular wave to the one that came before it, if it was just a C wave, it would have reached support at 43.85. Now it's back above that level, but it went below it. And I don't suspect that it's going to continue to rally from here. And so I'm looking for 43.44, which would be the next most common between a third wave and a first wave, if it's 1, 2, and 3. And then I'm looking for 43.44, 45 before it does any type of a sustainable bounce. So if we're indeed starting to fall into this larger correction and we're in the beginning phases, and this actually does work out to be a 5 waves down, then we may label it wave 1 of A, or we could label it wave A. We'll decide when it comes. Now, the outside chance, and that's why I'm keeping it outside. If for some reason this market continues to hold above 43.65, then there is an outside possibility that this whole move is a minute wave 1 of a minor 5. Or I'd have to back this all out to include this as a first wave of this last wave up. I just don't see that right now, but I'm going to put it in an outside alternate view, because in order for that to hold true, this market has to hold above 43.65 and rocket higher. I mean, rocket higher. And what really disrupted the market today was finally they got a chance to read the minutes to find in more detail what was said at the Fed meeting at the beginning of the month. And basically, they kind of changed their wording a little bit. There's now more governors who seem to feel that they might need to start to taper and stop the asset purchases that they're doing before 2023. So they're really now stating that they may need to do it by the end of this year. So as we enter into the third quarter and we push forward, it could become more serious in terms of that they're going to need to do that. And if it does become more serious, so this market has a lot of room to sink. We have so much fluff. And what I mean by that is things are so overvalued that that's got to come out first. And that's what we're seeing now. So again, I'm just going to repeat myself, but what we get to see is everybody's like, they've been waiting to get out. They've been waiting to take the profits, because I think there's a lot of people that realize this is all fluff. This is all overbought. This is overextended. This is not sustainable. And so they've been kind of waiting when to take profits, and if they start to see it like they did today, and we did see hedge fund managers, we saw portfolio people come in and they start hitting the market. And so they're selling larger positions. And I think that that will continue. Again, if this is the third wave, and not the major third wave, but just a beginning third wave down, then I'm definitely looking for 43, 44. That takes us below that 43.65 number. And that's enough. That would be enough. And that drives us down to our real first support in this, if we're counting on fourth waves, would be that one right there, 43.65. And then I need to take this up. And if I go to the 4 hour, which will give us more data, this is the next line of truly stronger support. Once this is broken, it drops to the next 4, which is of the intermediate degree. So we don't, if the minor degree doesn't hold it, then it's the intermediate degree that's up next. And so that puts us at 42.24. Now, I will be able to add more Fibonacci extensions as this progresses. But right now, I've got to wait. I've got it lined up for this particular wave that's in motion right now, because I'm basing it on this one. Once I get another one and I get a wave 4, then I've got another line to put in where I think that a fifth wave could come in. But we have to let the market unfold. We have to let things begin and start to unfold before we can add more to it. So right now, these are the support zones for a move coming off, a downside move. If it begins to rally, then it starts getting above here, then I can add retracements just for this particular wave. And that's how we're going to have to measure this. And that's how it will become tradable as it starts to come off. So what we need to bear in mind is, one, the fact that we may have a major trend change occurring right now. We're going to need additional confirmation. One thing that I will share with you is if I go out to the daily chart, and I'm going to, once I get it, I will open it up. This is the 20-day moving average on the daily. Now, yesterday, it came down, touched it, and then came back up. So it didn't necessarily, it broke it, but now we needed confirmation. And the confirmation comes on the next day, if we get a close below the 20. And you can see that it broke it at 44.04 and then slid through and closed below it. That is, number one, showing us the market has extreme weakness right now. And number two, that likely the top is in. When the daily starts to flip and show us weakness, that puts us into a position where on a daily basis, the market could drop to 43.42. And that again would break below the 43.65 area that we're now looking at as a support level. And it might just be a support level to produce a bounce, nothing more. But I think it goes through it. And we end up finding a stronger support level down here around the 50. So we have the 1.618 at 43.44, and then we have the 50-day moving average on the daily at 43.42. And then additional support right below 39. So this is a zone which could supply enough support to get a decent bounce going. Again, if we have a trend change, upside moves are bounces, downside moves are trend. And we can begin to put that together by looking and realizing that this was 5, this was 3, and now it looks like we're doing another 5 down. And by the way, at this finished this small wave 2 or corrective upside move, then we have 1, 2. It was all 3. And this is on the hourly chart. So there's no breaks in there. It just comes straight down. So I can't count and say, well, we got a 4th wave in there and now we're coming down in the 5th. So we may come down and finish the 3rd, go up and do a 4th, and then come back down and get ourselves down to here. But the weakness is apparent. So I think that for tomorrow, upside should be limited. There may, and when I say limited, it just means I'm not looking for this thing to turn around and blast. If it does, well, then it's going to give us a lot of messages in terms of, wow, okay, this held. Now we're turning higher and it might leave, but it has to break back above 44.1175 before we're left with a 3-wave pattern down. And in essence, it really needs to break above 44.50 to confirm it. So it has upside, but the potential, I think, is going to be very limited. So I think that the turn has occurred, and I'm labeling it as such. This is all a work in progress, so to speak. The count is a work in progress. I am basing it on what the market tells me on that particular day. And so the market today is telling me those highs are in, and we're now starting our next larger decline. And we've been looking for it. I even mentioned it when we got through with that. I wanted to give the benefit of the doubt to the rally and to these larger degree advances to complete. And it looks like that's where it happened. This was a clean 5, and it works. It definitely works. So I think we're in the downside. And so for tomorrow, again, a lot is going to depend on how Asia markets react and how the European markets react. And if they're all going to turn negative on the US because of what the Fed basically put out in their minutes, and the fact that we have COVID, and the fact that we have the Afghanistan mess, this is all kind of weighing and putting pressure on the market. And so I just think that as things start to either resolve or get worse, it's going to depend on how heavy and hard this gets hit. But I think we're going to see this initial reaction again tomorrow morning, and we may see it overnight. So depending on how deep it gets, it's going to also then set the stage for, okay, we're due for a bounce. We're going to get a bounce out of all of this. And then we can measure that. Putting wherever this thing bottoms, I would just run Fibonacci retracements from that high at 49.75 to wherever this bottomed, and then turns up. And you're going to get Fibonacci retracements, because we're not looking for a big turn. I'm certainly not going to be running this here, and then, or from here down to here to get what I think an upside move is going to be. I don't think that's going to happen right now. Upside moves, yes, but not a major upside move. I think the top is in. So, and we will continue to let the market tell us, but I think in terms of trading, please pay very close attention to your moving averages and see where they are. Even this 200 is starting to roll, and the 50 is now pointing strong down. That's not just a mild turn, that's a pretty steady turn. And the 20 is now directing down, and the 4 is like plunging, and the 8 is pointing vertical. So I think that we still have some downside to do. And it's going to take a lot to turn the boat around from here, at least in terms of the moving averages. The 200-day is just now beginning to turn lower. So it tells you how long it takes. We've gotten quite a bit of downside. From the high, we've dropped 100 points. And it's now just beginning to turn. So this is where I'm going to leave it. But I just wanted to make sure that if you're listening to this, you notice this count. Can it change? Yes, it can, but I'm not counting on that it's going to reverse and go up and take us to 4,500. Not at this particular moment. So this is where I'm going to leave it. Again, I'm going to be putting out the video, which gives me gives that mid-year or the next few months outlook for the S&P. There will be a disclaimer now in there, and there'll be an urgent update type of a written, which will be included with the video, that does say that the market looks like it put in its high today, put in the highs back at 44.76, and we're in the process of unfolding in the first 5 waves down of a major correction. This is where I'm going to leave it, folks. Again, trade room, summer promotions. They're available. They're out there. Join the trade room. We'll all be trading this together. And there are so many opportunities. Today, by the way, even though it was negative and people want to consider that, oh, how could you sell it? There was so much money to be made. And people in the room made good money today, solid money, because we're trading what's in front of us. We're trading. You got to trade the downside? Fine, let's trade the downside. But the fact that it's now, even the S&P is moving cleaner and stronger down. This isn't just futzing around. They're sliding. They're sliding lower. And so that is just opportunity written all over it. I hope you do make a decision to join us in the trade room. Take advantage of those promotions. So I'm going to leave it. The next update is tomorrow, the 19th.